good morning, good evening, good afternoon, students and traders all around the world. This is FXFreedom broadcasting you live on YouTube. And this is Forex Trading Course 101. Let me check the sound. Sound looks like okay. Maybe it's too strong, right? Too strong. You are yelling. Okay, give me a second. Sound check. There you go. Everybody, trading is a learnable skill when we learn in the correct way the three pillars. Pillar number 1 is the market, pillar number 2 is the strategy, pillar number 3 is the trader. And today we are ending the beginner module. Okay, today is our last day of Japanese Candlesticks Forex Trading Week. Starting from tomorrow, we are going to start the intermediate module. What we are going to do today, we are going to analyze the charts. Okay, we're going to analyze it. Type in the chat what chart do you want to be analyzed, everybody. And we are going to put in the chart market structure, highs and lows, trends, trend lines, support, resistance, pivot points, and candlestick formations. Okay, if you did study well, you should be able to do by yourself what I'm going to do today. If you did not study well, everybody, and if you did not practice enough, please go back to Dukascopy YouTube webinar page and start to watch and learn with lesson number 1, basic module, what is market structure. Okay, so we are going to do today what you should be able to do. This is part of the first skill. Trading is a learnable skill, you can learn this. So tomorrow we are pushing into the intermediate module, and you should be able with no problem to do what we're going to do today. Okay, everybody, type in the chat currency pair that you want. So we're going to implement market structure, highs, lows, trends. Good evening, boss. How are you? Captain is here. Everybody say hello to our Captain Yanis. Hello, Julius. How are you? Sorry about the notifications were not set up today. Not a problem. Not a problem, everybody. Okay, and yes, any currency pair, not a problem. NZD-JPY, NZD-JPY, NZD-JPY. Your students thought should know your start time. Don't bother, Yanis, don't worry, it's just one day. Like in trading, right? One trade means nothing. Okay, but they are going to have the recording anyway, it's not a problem. Okay, everybody, remember, starting tomorrow, I am bad. Old stomach ulcers are acting up. Stay at home today. Oh, hopefully you get some better, Yanis. Drink probiotics, Actimel, I don't know. Oh, NZD Cat says Julius on TradingView says NZD Cat. Okay, NZD Cat, even better. Everybody, if you're on YouTube, you have a priority. Okay, I have another streaming platform, so YouTube has the priority. Okay, guys, yes sir. Okay, everybody, you should be able to do this by yourself, what I'm going to do right now. Okay, because tomorrow we are going to start with the intermediate module. One more time, everybody, not to repeat myself. If you are unable to do this by yourself, please go to Dukascopy YouTube webinar page and start to learn market structure, highs and lows, support, resistance. Know that you need to type the pairs with a space between. NZD Cat had to be pre-approved. In space between, NZD Cat, no issues from YouTube. Wow! Really? I didn't know this. Nice, nice, nice. No, it's from YouTube. Wow. NZD Cat. Wow. Okay, everybody, so Number one, basic module, market structure, highs and lows and trends. You start with the monthly chart and you draw the upper band. Okay, you draw the upper band. Remember, it's not aligned to the pip, it's a level. And clone, you drew a lower band. Hello Nancy, how are you? Okay, this is one on the monthly. Now, from the monthly, you are not going to see higher highs, higher lows, higher highs, higher lows, lower lows. So you are going just connect high to lows, high to low, low to high, high to low, low to high, high to low, low to high, high to low, low to high. And you are then waiting so far. You are waiting for the market to break this low, and the break of this low is going to confirm the next extension leg. Hello Clara, how are you? Yeah, the chat has a strange filter, says Yanis. As a moderator, I see the blocked message. Thank you very much. Everybody, our captain is telling you that YouTube has some strange settings that you can put currency pairs with the space in between. NZD space CAD or AUD space CAD, whatever. Thank you, Yanis, for this insight. I didn't know. Everybody, this is the monthly chart. We have the monthly bands. We have the short-term trend from the monthly. We have the not the trend, but the market wave, the market structure. And then we are going to put this color in here, which is a representation of a pivot point. So pivot point in here, pivot point in here, pivot point in here, pivot point in here, support, pivot point in here, support in here. Support is going to be green. So support is in green, green, green. And here pivot point. Remember, pivot points are not lines to the pip. Don't ask me why it's at 0.86 something, you know. Those are areas. Maybe this one too. High, high. I have two highs. Okay, everybody. This is one. Once you are over the monthly chart, you clone the chart and you go on the weekly chart. Hello Allah, how are you? You go on the weekly chart and now you have support, resistance, pivot points, right? One more, I forget. What did we forget? We forget the trend lines, right? So far the downtrend line is like this. This is the downtrend line. Once the market makes a lower low, we are going to adjust our downtrend line to like this. Make sense? We've learned all of this. Okay, everybody? Somebody's typing, what is happening today? Aren't we going to trade? Today, everybody, is our last day. Tomorrow we are going to go in the intermediate module. So today what we are doing, we are showing you what you should be able to do by yourself. If you learned well, you should be able to do by yourself with not a problem. If you didn't learn well, go back to Dukascopy and watch all the lessons and study again. Olufemi, hello everyone, didn't know the lesson had started, no notification today. Yes, I'm sorry, but you are here, so not a problem, not a problem. And so trend lines, monthly chart, weekly chart, downtrend line, right? Downtrend line in here, and then we had the uptrend line in here, and then the market reversed one more time. So we are going to delete the trend lines that are not valid anymore. This is out. But then we have downtrend lines. We have this one, downtrend line, right? Okay, everybody. and this is now the monthly, the weekly chart. So market structure, highs and lows, trends. So let's check the trends. Trends, trend line, support, resistance, pivot points, we have it. We need to check trend lines and trends. So on the weekly, on the monthly not, but on the weekly, we are able to connect highs to lows. So high to low to high to low to high to low to high, high to low to high to low to high to low to high to low to high to low. Color code with red. Okay, maybe a little bit something like this, less transparent. Okay, everybody. And NZD cat, Julius asked for about NZD cat. This is now the general overall picture about this currency pair on the weekly chart. Everybody, and with this understanding, talking about direction, not timing. Should you be selling and shorting NZD CAD on the 1 hour chart, 2 hour chart, 4 hour chart, 15-minute chart, 30-minute chart, or should you be buying NZD CAD on the 30-minute chart, 1 hour chart, 2 hour chart, 4 hour chart, daily chart? Yes, there is no right or wrong. What do you think? Tomorrow we are starting the intermediate module. You should have your charts like this. Make sense, everybody? And once you are done with the weekly chart, you close the chart and you go on the daily chart. Daily chart. Daily chart. And the yellow lines are the market structure, market wave from the monthly and the weekly. Okay, now here, remember everybody, we deleted here the yellow line from the monthly on the weekly. Now we are going to do the same. We are going to delete this one from the weekly. Okay, and we want to see how is the market wave from the daily. Somebody's typing, oh, isn't it the same? No, it's not the same. Make sense, everybody? It's not the same. So daily chart, extension, retracement, extension, retracement, lower low, extension, retracement. Is this a lower low? No, it's not. Is this a lower low? Yes, it is. Did the market stop? No, it didn't. So extension, retracement. Now this is the market wave on NZD daily chart. Shola says short, Dan says short. Yes, ma'am. Yes, sir. Okay, now this is the daily. We have the daily market wave, and with the daily we can now connect highs and lows, high to low to high to low to high. So we are going to see the short-term trends, right? Maybe not all of them, but the most relevant ones, right? Somebody's typing there a lot highs to lows. Yes, they are. High to low to high to low to high to low. So this is the short-term trend now on the daily. See extension, retracement, and we can zoom in. Low to high to low, not a 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 low, low. Wow, this was a downtrend, low to high. And this is now the big picture from the daily. So you have the monthly, everybody. You have the monthly chart like this. If the market breaks this low, then we are going to readjust our downtrend line like this. Not yet. It stays like this so far. Then this is the weekly. Everybody says short. Yes, correct. This is the weekly. Okay, you see the yellow market structure, and you see the downtrend lines, and you see the red short-term trend from the weekly, right? And we've learned lastly about candlestick formations. So if this was the visual from last week, everybody, and it doesn't really matter, right? It doesn't really matter, or this counter trend line break and this bearish candlestick formation, or this counter trend line break from the weekly and this bearish candle, right? Not the white one, the blue one. Would you make some pips and money with the understanding on how this market works? Would you make some pips and money in here if you would short the market? It's a general question. Yeah, it has a long tail on the upside, agreed, but nonetheless, talking about direction, this market went down. And here too, everybody, candlestick formation from the weekly chart, right? You have a bullish candle, counter, trend line break, bearish candle. This is the signal that the market most likely, probability wise, 7 times out of 10 is going to fall. Bam! And this is the skill. Make sense, everybody? It's not the whole skill, this is just the part of the skill. If you would go long in here on the 15-minute chart, 1-hour chart, 4-hour chart, I mean, it really doesn't make sense to me if you ask me, okay, let's go long in here. Why would you go long on a down structure, down market wave, counter trend line break, bearish candlestick formation? For God's sakes, why would you go long in here? You would lose. 7 times out of 10, you would lose. And lastly, the daily chart, right? Daily chart goes the same logic behind. You have a down market wave, down market structure. You have up and down, down extension, up retracement, down extension, right? And talking about candlestick formations, right? You had a trend line in here and you had a trend line up in here. We've learned about candles and candlestick formations. This candle here, the big blue one, was the signal so far, right? Before we've learned about candlestick formations and candles. We've learned about how to interpret the tails and how to interpret the body. So indecision candle, kind of masked bearish candle, indecision candle, bam, bearish decision candle. This was the signal for you to short. Stop loss depending on the pattern, but let's say that I'm trading the short-term trend, right? Or I'm trading the candlestick formations, even better, candlestick formations, stop loss up in here. I'm shorting the market and this is how it goes. Everybody, can you do this? This is the learnable skill that you should acquire, that you should have acquired. I'm not sure if my English is correct, but this is the learnable skill so far that you should have acquired and understand how this market works. And tomorrow we are going to start the intermediate module. If you didn't learn well, hurry up, because it's going to get more and more complex in here. Not more difficult, everybody, but more complex. Make sense? So far, this is the skill. So far, you should be able to do this by yourself. Any questions so far? Everybody, this is the technical skill. This is the analyst part of the Forex Trading Course 101. We are trying to learn how this market works. And with learning how this market works, we are also getting an insight of how profits are made and how losers are made. Make sense, everybody? This is the foundation. Forex Course 101 is the foundation. It's a foundational course. We are trying to understand how the market works. And we are trying then to build a strategy in order for us to take advantage of the market. But we are not expecting to make consistent profits until we get down to here. Forex Course 202. But you cannot go in the Forex Course 202 without the foundation, without the foundational knowledge on how this market is predictable to a degree. What else did we learn? We learned that, talking about trends and support, resistance, pivot points, we learned that the market behaves extension, retracement, extension, and then when a retracement comes, we learned that most likely 7 times out of 10 the market is going to retrace to past resistance, and then most likely the market is going to reverse 7 times out of 10. Somebody's asking, boss, on any time frame? Answer, yes sir, on any time frame. So with this knowledge, and this is the learnable skill, day traders, right? Day traders, scalpers, swing traders not, but day traders, it go long, 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 you know, long for the week, long for the day. Stop going long up in here. Make sense, everybody? Does make sense to you? So this is theory, you know, down extension, talking about direction, you are going up. This is the retracement on the market wave. So the market wave is the red one, and now the retracement started up in here. Don't go long anymore, you know. So this is the bullish candle, market going up, okay. If you went long in here and you've lost, this is the why. With this foundation, you need to learn. If you are learning well, you are going to understand, oh my gosh, I lost on the 15-minute chart, I lost on the 1-hour chart, I lost on the 30-minute chart, I lost on the 5-minute chart, whatever. Why? Because I went long here. I went long in past resistance. Make sense, everybody? And again, we learn trend lines. Some of you still today, you are entering prematurely because you didn't acquire the technical skill how to properly draw trend lines. Go back on Duca's Copy YouTube webinar page, everybody, and you have all of this knowledge. Yes, you have different folders. Forex Course 101 2019 edition. Forex Course 101 2020 edition. 2021, not sure. Make sense, everybody? If you know, if you perceive that you are making mistakes when you draw trend lines, watch the streams over and over and over again. Download the video and watch and study. Market is all mixed up. You don't have a clue about market structure and trends. Download the lesson and watch it over and over and over again. You're entering the market and you're losing trades most of the time. Download the lesson about support, resistance, pivot points and watch it over and over and over again. Make sense? Now, you are not going to like it, but you cannot enter. We are still looking for traders to partner up, to give you capital, everybody. We are still looking for traders. You are not going to find a trader in the Stanford Yale University. Okay, we are looking for traders like this with investment banks, brokers. Okay, but you cannot enter into the institutional course if you don't know. And if you don't know how to explain to me how are you winning, not making money, but you need to understand how the winners, how did you produce the winners and how did you produce the losers. Somebody is asking on the other streaming platform, everybody, not YouTube, but the other streaming platform, Freedom, do I need to be profitable in order to enter the Forex course 202? You are going to be happy with the answer. No, absolutely not. Everybody, in order to enter the institutional trader course, and it's not for free, okay, you are going to pay. You don't need to be profitable, but you need to have the foundational understanding of the basic module, beginner module, intermediate module, and the advanced module. Okay? If you are going to study well, it happens all the time. If you are going to study well and train and practice, then you are going to become a good analyst. Some of you applied for a job and you got the job. You are an analyst today in some broker, investment bank, hedge fund, right? You are an analyst. Okay? You have all the knowledge to get a job if you want. But if you seek freedom, everybody, then if we seek freedom, we need to move forward. We need to upgrade from the analyst skill to the trader skill. Make sense, everybody? Analysts are not necessarily traders. And fair enough, traders are not necessarily analysts. The rich banks like JP Morgan Chase from USA, in the, not all of them, but in some trading departments, the trader is working shoulder by shoulder with an analyst. Make sense, everybody? Okay, after this beautiful sermon from Father FXFreedom, any questions so far? Any other currency pair, everybody, that you want to check? We have 30 more minutes. Do you want to everybody to do the same exercise again, or do you want to trade? What do you prefer? And don't worry, everybody, once we are over the multiple time frames or the Fibonacci's or crowns, we are going to have more of this Forex trading week. Make sense? Every single time that we are over a topic, then we are going to have the Forex trading week where we are going to implement what we have learned so far. So far we learned this stuff in here, and so far we have the understanding, right? If I short the market in here, just an example, and if I'm going to win, I know why did I win, and if I'm going to lose, I'm going to know why did I lose. And this goes over and over. It gets just easier. In the beginning, it's market structure. You know it's more or less the understanding, but beginner module, it gets easier and easier to understand how we produce the winners and how we produce the losers. And it's going to get even easier with the intermediate module. Once you understand Fibonacci's and crowns and news trading, it's going to get easier and easier for you to say, oh, this is how I win. Oh, this is how I lose too. Oh, I should have entered in here. Or, oh, I really shouldn't have entered in here too. Question, everybody, can you do this? Did you study well? Type in the chat, what do you think? Can you do this, what we just did right now? Put the pivot point, support, resistance, trends, trend lines, and the market wave on the charts. And then looking at candles and candlestick formations to determine the higher probability. Meaning, should I sell the market or should I buy the market? Can you do this, everybody? Yes, there is no right or wrong. Somebody's typing, oh, but I'm on the 15-minute chart. It doesn't matter. It doesn't matter. Everybody, you can accept what we are teaching you and you can reject, okay? We don't have time to play ego games, you know, who is smarter. If you think that you don't need to check the monthly candle because you are on the 5-minute chart, everybody, believe me, you would win much more if you would check the monthly chart too. Make sense? Some of you still today are thinking, oh, I'm on the 15-minute chart, I don't need the monthly and the weekly. Some of you say, oh, I'm on the 15-minute chart, I don't need the daily even. The higher time frame and the grandfather, the hell, it still blocked the pairs. Don't worry, Yanis. GBP CHF, GBP Czech, Krona, no exotics, everybody. Okay, no exotics. Why not, boss? Because we don't trade them. But GBP CHF, it's okay, right? GBP CHF, everybody, let's delete the ends, the cat, bye bye. GBP CHF monthly chart. Compress the chart. GBP CHF. This is the whole spectrum. And delete. Are you want to cancel this? So yes, let's delete everybody the things here. Delete. Yes, okay, there you go. So upper band, and this is going to be red. Dancy, can you explain when we exit the trade with small profit, we must re-enter to make more twice as we risk, but what about then with stop loss on the second trade and risk reward? Can you explain when we exit the trade with small profit, we must re-enter to make more twice as we risk, but with at about then we stop loss on the second trade and risk reward? Sure. Great question, Dancy. Everybody, is just an example, right? Let's say that you have head and shoulders. Okay, you have head and shoulders. Okay, and the market starts to do something like this. Fair enough? Okay, this is the market. When you trade head and shoulders, guys, make sure that you message pass through. Thank you very much. This is head and shoulder, right? We have the left shoulder from my perspective. You have the head, right? You have the right shoulder, and then we are going to trade the right shoulder. So it's just an example, everybody. This is the mindset, and this is the technique. It could be crowns, uptrend, downtrend, whatever might be the case. Stop loss goes on the pattern traded, Dancy and everybody else, so stop loss it's up in here, agreed? This is the stop loss. Why above the head? Because until the market breaks the head, this pattern is still valid. Yes, but there is no yes, but. Period. End of story. Stop loss goes on the pattern traded. The appropriate stop loss is where the market breaks the pattern. Oh yes, but. There is no yes, but. Okay? Are we clear? There is no yes, but. Those are the rules. Okay? Okay, very good. So now we are here. The market is kind of retracing the green one, and then with the counter trendline break, something like this. Okay? The market is going to break the counter trendline break, make a lower low, even better. So this is going to be our entry in here. This is our short entry, short entry, short entry. Okay? So if this is the case, we are entering at the price level. Don't bother with the numbers, everybody, just an example, but we are entering with the blue horizontal line. We are entering at 4.08526. Okay, we are entering in this price level, and our stop loss is somewhere up in here. Okay, and our stop loss it's at 5.05255. Okay, now for this exercise, let's say that me and Dancy, from the entry to the stop loss, let's say that we are risking 1%. Okay, everybody, 1%. Okay, 1% in here. Okay, now if you have $1,000, just an example, 1,000 euros, 1,000 euros or dollars. Okay, how much is 1%? 1% is 10, right? 10 euros, $10, 10 euros. Okay, so we are risking 10 euros. Just an example, if we are short entry here, we are shorting the market. If the market goes against us and against us and against us, and it breaks the pattern, me and Dancy, we are going to lose 10 euros or 1%. Now Dancy is asking, can you explain how we enter again or re-enter? Right? So the market, we entered short, the market is falling and it's falling, and most likely it's going to come to support, right? And then the market is going to start to retrace, and here is where me and Dancy and all the beginner traders get scared, and we exit the trade with a small profit. Agreed, everybody? We identified a head and shoulder pattern. The stop loss is in the correct place. We entered with the great entry setup. We are risking 1%, but at this support, yes, just an example, with this support in here, the market is kind of reversing, which is normal. The market is retracing, it's totally normal, this is how the market works. But me and Dancy, we are getting scared, you know, and instead of us winning, so if this is 10 euros, instead of us winning 2 euros down in here, we get scared and we close the trade with 1 euro, $1 in profit. 1 euro, $1 in profit. Okay. Now, Dance is asking, okay, so I know that I should re-enter and the market is going to do something like this, hit past resistance again, and this is going to be my next entry. And then she's asking how to do this, because my risk from the first entry to the second entry just increased. So this was the first entry. Now I know that I need to re-enter because I need to make more money that I'm risking. If I'm risking 1%, I need to make 2, but my risk reward ratio just increased. And here is the answer. You are going to risk the same 1%. Okay? Now, we are not going to waste time, everybody. We don't have time. What does this mean? This means that if you entered with the volume or lots 0.010 or whatever, or maybe 6, right? 6. Okay, here you entered with the lots with 0.06, just an example. Now here you are going to still risk the same 1%, but you are going to enter not with the same, of course not, because you are risking more in pips terms, but you are going to enter with 0.04. Make sense, everybody? You are still going to risk 1%, but because you are entering down in here, you are going to enter with less volume, with less lots. Okay? Then see, did I answer to you how to do this? You are going to enter down in here, but you are going to risk the same 1% and you are going to have the same stop loss level, the same correct stop loss level. And again, this is a skill. The understanding of this, it's a skill. What do the uneducated, we are not judging anybody, it's all about education. What is the uneducated beginner trader going to do? He or she is going to put, he or she does not know that he or she can risk the same 1%. This is a calculation, you can do this in Excel. They don't have the knowledge, so they are going to move the stop loss to down in here somewhere. And then they are going to enter the market, and the market is going to go their way and is going to stop them out. And they are going to cry, oh, this doesn't work. Yes, but targets minimum on the second trade too. Yes, sir, absolutely. Everybody, it's all about education. Some of you think that the bigger the stop loss in pips, the bigger the stop loss in volume and the money. This is not true. Hear me out, not true. This is a myth or misunderstanding. Make sense, everybody? You can risk 1% on 50 pips and you can risk the same 1% on 500 pips. How? You are going to enter with less lots, less volume, but you are still going to risk the same 1%. Make sense, everybody? How it's done? Not sure if we have enough time. Okay, so everybody, I believe we have a class about this already, right? So you need to calculate your risk in pips. Risk in pips. So trade number one. Trade number one, risking pips, everybody. And so without the comma, 505,255 minus 408,526 give us, it's just an example, don't bother with the numbers, we are risking 96,729. Okay, we are risking, edit label, we are risking 96,729. Okay, trade number one, this is that much. With the second trade, let's say that we are going to enter in here, calculator again, our stop loss is still in the same at the same level, so 505,255 minus now 389718 gives us 115. So clone the second trade number two, we are risking 100,015 115,537. Okay, everybody. So with this trade, with your first trade, you are risking 96,000 pips. With the second entry, don't bother about the numbers, it's just an example, but it goes like this. You just need to put the correct numbers in. But with the second trade, you are risking 115,000 something pips. So you have more pips in risk. You have more risk. You are risking more pips with the second trade. Makes sense? And this is why the volume, the lots on the second one is going to be smaller. Make sense, everybody? You cannot have more. If you're risking, some of you, I'm telling you, don't risk the same lots on every. Some of you are going 005, 005, whatever the risk in pips you're entering with 005. Don't do this. Why not, boss? Because if you are going to risk always the same, you are automatically increasing the risk in monetary terms too. You are not going to risk the same 1% if you go with volume 006. Make sense, everybody? Just an example, exactly. Now, once you have the risk in pips, it's just an example, so you have 96, maybe $10 euros is not going to cut it because it's too much pips. Let's say that you have, let's say that your 1% is 10,000, okay? 10,000, just for math wise. 10,000 divided 96729 gives you 0.10. So volume is on a 10,000 stop loss, 10,000 is 1%, it gives you 0. Give me a second, everybody. It gives you 0.103, 0.103, 0.10, right? Okay, now on this one, on the if it would be 10,000 euros, you would have the volume, the lots, 0.10. And on the second rate, you still are risking 10,000. 10,000 is 1% of your account. Again, don't bother with the numbers, but this is the process how to calculate. Divided 115. So you're dividing the money that you're risking with the pips that you're risking. And everybody, tell me, everybody, is the second trade going to have the same lots, the same volume, or is going to have less volume, less lots? Type in the chat, everybody. You are seeing on the screen, is the second trade going to have 0.1 lots or volume, or is the second trade going to have a less lots on volume? So hopefully today you understand that you can risk more pips, but you are still going to risk the same percent of capital. Isn't this good information, everybody? Isn't this good information? Don't increase, everybody, don't increase the risk in percentage. Okay? What I want you to learn today, the bigger stop loss doesn't mean the bigger risk. Less, thank you very much. How much? Everybody, golden nugget, tell to your friends and family. Not true. It's not true. Oh, I don't want to have a big stop loss because I'm going to risk much. Not true. Get educated. We are not judging anybody, everybody. Okay? No, we are not arrogant at all. This is education. But you can tell your friends and family who are smart to get educated. Okay? Having a tight stop because you don't want to risk much, this is a myth. Doesn't work like this. Okay, everybody, our time is up. See you back tomorrow. So hopefully, yes, 008. Exactly, 008, right? Clone. Edit label 008, 008. 008. Tomorrow, everybody, we are going to start with the intermediate module. Have less, inshallah, yes. Until tomorrow, everybody, again, one more time, you should be able to do what we've done today with not problem. If you didn't learn well, go back to Dukas Copy YouTube webinar page and start to watch lesson number 1. Basic module, what is market structure? Anyway, tomorrow we are starting with the intermediate module. Until tomorrow, stay strong and trade for freedom. You want to be free, right?